Good afternoon and welcome this afternoon to Trading Price Patterns, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Cameron May, who is a 20 plus, going on 30 plus year veteran in the financial markets now. And he's there to help facilitate the conversation. I'm glad to have him here to help answer those questions along the way. Thanks for joining us, whether you're here in the live version or in the recorded version. We're glad to have you in both places. If you are in the recorded version, leave us a comment in the comment section. We'll get back to you as quickly as we can. Typically, we do that within a day. If you're here in the live session, you have the benefit of being able to answer or ask those questions and get them answered right away. And as always, follow us on social media, on X primarily, at Ben Watson CS, at Cameron May CS. You can also find us on LinkedIn. And Cameron has posted that information up at the top of the chat. We'd love to have you be part of that community and part of that conversation. It's also a great place to ask us questions as well, because we track that conversation as well. So good to have you there. So my thought today, as I'm stepping in for Rachel in this discussion today, is to talk a little bit about the idea of searching for price patterns. There's a lot of different ways to go about that, but this is a common discussion of investors, traders looking for price patterns. How do I know when a price pattern is appearing? How do I go out and search for them? How do I find these price patterns? And there's some corollary questions to that come up quite a bit. One of the corollary questions is, can't AI, can't some tool do this for me? Do I have to look at these patterns? And there's a lot of different ways to kind of approach that. And we're going to talk through those in this discussion today. So we're going to discover, and I'll tell you, Cameron does a great job of this in a lot of his webcasts, discovering some of the unknown or hidden features of the Thinkorswim platform. We're going to show you a couple of those today that perhaps you had not realized were available when it comes to price patterns. And we'll talk about the benefits and some of the drawbacks to using those tools. So let's jump into this. A couple of quick housekeeping items. Remember that everything we talk about simply for illustrative and educational purposes only. It is not a recommendation of any sort or particular account type or strategy or pattern or anything else. If we happen to talk about options, which I don't think we will in this discussion, but options carry a high level of risk, we're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Now, we're going to use technical analysis, obviously, since we're talking about price patterns in this discussion. But technical analysis, fundamental analysis, probability analysis, all of those are theoretical in nature. None of those are guarantees. And as such, Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Now, this is an important consideration. We're going to be using the Thinkorswim desktop software platform today, specifically the paper money version of that platform. Some of the tools that we will be using in this discussion today only work in a live trading environment on the Thinkorswim platform and do not work in the paper money environment. That's a resource issue. So given that, make sure that you are aware that as you move your practice from paper trading to live trading, sometimes things change. Order fill prices will change from paper trading to live trading. The use of some of the studies and tools will be available in live trading that are not in paper money. Short options won't see early assignment in paper money, but will in a live trading account. So just be aware of those differences. Remember that these aren't guarantees as to what's going to happen in the market. Paper money is a great learning environment, but it doesn't guarantee that you're going to be a successful trader out there in the real world. And remember that investing involves risk, including the loss of principal. So let's do this. Let's pop over here to the Thinkorswim desktop software platform. And I wanted to just address one of the questions that Future Divide asked here. Is this a class specifically on the opening range breakout, aka ORB? No, it is not. Talking price patterns in general, and we're going to talk some specific price patterns, of which that is a particular type of price pattern. It is not the price pattern that we are discussing today. in this conversation, but we can talk about some of those characteristics, and I think you'll see some common elements in this discussion. So the first thing I want to do is establish what's going on in the market, because that gives us our kind of directional market posture and our opinion of what we think might happen. Not a guarantee that it's going to continue or anything else. But taking a look at the S&P 500 here, the S&P 500 gapping up a little bit today and breaking above the 50-period moving average with some strong relative strength index movement. The RSI moving a little bit higher here, moving above a previous high in the short term. So seeing some strong momentum or stronger momentum than we've had in that break above the 50-period moving average. So some bullish trend. Longer term trend here, the 200-period moving average is still up. That's important to consider, because that would lead us perhaps to be looking for bullishly biased price patterns on individual stocks. So that starts to shape our opinion, which is kind of the first step in establishing what we're going to be looking for with a price pattern. And a price pattern is simply, a confluence of, or a divergence of, levels of support and resistance compared to trend. So that's going to be kind of the structure as we put this scenario together. The NASDAQ having a much stronger day just from an objective standpoint, right up 1.25%, a little bit more than 1.25%, but banging its head on the 50-period moving average, which has slightly started to roll over a little bit. So biggest impact came a week or so ago to the NASDAQ. Biggest return or rally here going on in the NASDAQ as well, but still running into a little bit of a resistance level, maybe breaking through that 50-period moving average here in this particular case, doing it with some momentum. So we might also look bullishly in the NASDAQ for some price patterns that are giving us those breakout opportunities. And then taking a look here at the Russell 2000, and I'm already starting to see a price pattern building here on the Russell 2000 index. And if I were to draw this in, just to kind of start our process of looking at price patterns, you can see I've drawn a lot of lines. I tend to draw a lot of lines. Many technical traders do, simply to denote where we see levels of support and resistance. So if trend is the starting point, the next component of a price pattern is the idea of where are levels of support and resistance, and where do they exist? How are they shaped relative to one another? Relative to where the most recent level of support might be, where the most recent level of resistance might be. And the price pattern I'm starting to see, and I'll just kind of zoom in on this, the price pattern I'm starting to see building here on the Russell 2000 over the course of this kind of intermediate time frame is this fairly well-shaped symmetrical triangle. Symmetrical in that it's roughly equidistant, high and low. It's the angles on this price pattern, if I kind of stretch this out a little bit, you kind of see that a little bit better. Those angles, let me come back out of that zoom just a little bit here. See that? And I'll even turn off the RSI so that we can kind of drop that down and gain a little bit of headspace there. So you can kind of see those angles are equivalent angles, right? It's a symmetrical triangle. It's like a wedge of a piece of pie or whatever. And so that suggests that buyers and sellers are coming closer together in their consensus. So small cap stocks, I might look for some reflection of these larger patterns that I'm seeing on the index as a whole in individual stocks. That we might be seeing individual stocks as this is running into a resistance level or getting very close to running into that resistance level, that we might see individual stocks on a price pattern basis within the small cap index also running into some resistance levels. There tends to be kind of that reflexive echo, if you will, that mirror of individual stocks relative to the index, because the index is reflective of what those individual stocks are doing collectively. Now, whether it's market weighted, whether it's cap weighted, that may change the nature, but you're going to see some common elements there. So we're looking at this still bullishly, perhaps because the trend is still up of these indexes. All three of these indexes still moving higher. We look at the 200 period, perhaps in this case, as an indication of that trend strength and direction. But that's maybe where we're going to start to go. Now, as we looked at this, I did this visually, right? All I did is I found those levels and I drew those lines to the places that made the most sense. If we were going to draw into this and start to look at this, I mean, just take these lines off again and just kind of show you what I did and visually what I'm looking for. I'm just going to take a few more of these off here. And this becomes kind of a visual search, if you will. So if you've got a watch list of stocks that you've developed, this might be something that you do on an ongoing basis, because the question that I normally get, either when I'm teaching on stage or in a webcast talking about this particular topic, is how do you find these price patterns? Well, first of all, it's kind of knowing what to look for, right? And it's adjusting your eye to those particular patterns. As you start to see these levels, you start to see, where those levels of support and resistance are. Now, here's the thing. It doesn't do a lot of good when it comes to technical analysis to try to calculate things, to try to calculate levels of support and resistance to 6 significant digits of precision, right? Because we know that support and resistance levels, and to OBT's question here, which is the applicability of supply and demand zones and how to identify them, we know that where price changes direction is an area of either supply or demand. One or the other of those forces is taking over at that particular level. And that doesn't happen precisely at the same price, at the same point in time. So to try to calculate this to the penny and this to the penny and this to the penny doesn't make a lot of sense. You will drive yourself crazy trying to do that. But drawing it with a big fat magic marker, and I'll show you what I often do to kind of do this in making this demonstration, is I'll take my annotation tool and I'll draw these in with a kind of a big fat brush, right? We start to see, all right, there's price change taking place in those areas. So it becomes a little bit more, and some of you have probably heard me talk about this, it becomes a little bit more like Jimmy Buffett than it becomes about Six Sigma and precision. Jimmy Buffett, in that he's got a song that says, the best cheeseburger is one that is not too particular and not too precise. Where we find those levels of support and resistance is not really a particular level. It's what makes sense. So to Barbara's question here, do I usually use wicks or top and bottoms, candle bodies, and drawing trend lines? My answer to that always, Barbara, is yes, I do. I'll use both, because I see both of those as indications of where there is an overwhelming amount of supply or an overwhelming amount of demand. So to go back to OBT's question, what are supply and demand levels? Supply and demand zones? Well, the supply level that's creating downward pressure is falling right along that line, right? That's a supply zone. That's a point at which there is selling pressure. There are sellers willing to sell at those prices. And this lower level of support here is a demand zone. It's where buyers are willing to step in and buy. And they're willing to do it at a higher and higher price. Now, you see what's happening here in this example of a price pattern is that their consensus, the buyers and sellers consensus is coming closer together. And my good friend Dragon Rider, who's out there in the chat, we've had this conversation before in a couple of live events about these levels of supply and demand and trying to identify them. So as you start to see this, yeah, exactly. I don't know where where we're going to go when the volcano blows. That's a really good comment on these price patterns. Because you see something like this, as that consensus is getting closer and closer together, right? As sellers are willing to sell at lower and lower prices. Why would they be willing to do that? Well, they feel that the price isn't going to go any higher. So they're willing to sell at those lower and lower prices. Buyers are willing to step in at higher and higher prices. Why are they willing to step in at higher and higher prices? Because they feel that it's probably in the near term not going to go lower, and they want to take advantage of the price that it's at now. When it comes back to that level, they want to get in so that they can take advantage of the price going higher. And what's happening is, with that consensus squeezing together, is that it's building up pressure. One side or the other is eventually going to take over. Now, I say that, but that doesn't mean that it has to happen in an explosive, volcano-blowing fashion, right? So when Jimmy Buffett says, I don't know where I'm going to go when the volcano blows, when we get a symmetrical triangle like this, when this price is squeezing into this area, right, there is this idea, right, that trend direction has some kind of bearing, right? And you can use other kinds of indicators. You can use the directional indicator. You can use ADX as a pressure gauge. You can use DMI as a directional indication. I like to just very simply use trend direction coming into the pattern. So if I've got a price pattern that's got a trend direction coming into it in a bullish direction, my first guess, my first thought is whether it is an ascending triangle, whether it is a symmetrical triangle, whether it is a bull flag, whether it is a pennant formation, which is where price kind of goes like that, whether it is a wedge pattern in some cases. We'll talk about that. That's kind of an exception to this. All of these types of patterns, I'm looking to that prevailing uptrend as a means to decide where it's likely to go once it breaks out. So there's buying pressure going on, right? Buying pressure going on, and the possibility is a breakout to the upside. Now, Thai asks a great question, and I'm glad you asked this question, Thai. DMI, ADX, whole moving averages, all of these. When we talk about this idea of being a leading or lagging indicator, Cameron's talked about this. I know Cameron's talked about this because I've listened to him, because I've been in the chat for this. Any technical indicator that is a mathematical adaptation of price, which is what DMI is, which is what parabolic stop and reverse is, which is what RSI or anything else, MACD, doesn't matter, TTM squeeze, anything else. All of those are lagging indicators relative to price. There is no such thing as a leading indicator that can predict what price is going to do. It just doesn't exist. That whole idea of calling something a leading indicator is a misnomer. It's I think, a detrimental misnomer, because it keeps people thinking that there is this hope of some kind of indicator that's going to tell me exactly what's going to happen when the volcano blows, when that pressure builds up one side or the other, which direction is price going to go and how far is it going to go. All we can do is make a decision and say, if this happens, then I know what I'm going to do. Or if something else happens, then I know what I'm going to do. So at this particular point, as we get into this particular price pattern on the Russell 2000, I'm glad this example came up, because I think this is a good lead into this discussion. So we can simply say, fine, if this breaks resistance above that diagonal trend line, then enter the trade, else wait. And where might it go first? Yeah? Where might it go first? Is right here. That next level of resistance overhead. No guarantees, right, of how far it's going to go. And if it goes down, if it breaks down below that diagonal support line, then enter the trade bearishly, or exit the trade if we're already in a long trade, right? And then where might it go? That next primary level of support is going to be the next, perhaps, target, if you will. Now, we can also use the price pattern to establish a target, because we can take this and we can just take that distance and kind of move that distance around. Let me see if I can do this here. And move that distance and just plot that distance like right up here. If it breaks out, that's going to move a similar distance, right? So as we get to all of these ideas, right, even pivot points, because all pivot points are doing are suggesting, based on where price has been, levels of short-term support and resistance, zinc. Yeah. So could you use the highest price? Absolutely. Could you, hey, guys, I know, here's what happens. And we've had this conversation before. People get sold the idea that there is some kind of magic to how you calculate price patterns and how you calculate the specifics of these price patterns. You got to do this, or you got to do that. You got to use the tails, or you got to use the wicks. You got to use the bodies, the candles. You got to use the highest price. You got to use the lowest price. You got to draw it here. You got to draw it there. No, you don't got to do nothing, because all we're doing is we're using this as a means to help us to understand what price action is doing in relationship to supply and demand, buyers and sellers. So to try to calculate this out, I'm going to just say it again. And I will tell you this, I've been looking at these charts for a long time. It is not that precise. It is not that precise. If it were, I would argue that the market is going to grind to a halt. If it became that precise and able to be calculated, then the market's going to grind to a halt, because then there is no difference of opinion, and then there is no advantage and no arbitrage between differences of opinion. But because Cameron thinks differently than I do, and because James thinks differently than I do, and because Wiley thinks differently from Dragon Rider, and Austin thinks differently from Zinc, that is why markets move and work, right? So, and we're not trying to time the market. We're not trying to say this is the best time. I'm saying this is a decision-making paradigm in which we can make a decision based on what we see. All right, soapbox done. Let's keep going with this discussion, because it's an interesting discussion. Now that we start to see these price patterns, we start to see the establishment. So trend, support, and resistance, and then we'll start to add into the mix some of these characteristics of these price patterns. So I want to bring one of these price patterns into the mix. And remember, I said I wanted to look at the ways that we could go about searching for price patterns. Now, there's a lot of different ways that we can do that. I'm going to change my grid here really quickly. And I'm going to make this my single grid. And some of you know this if you've been in my other webcasts. I just use this as kind of a sandbox to play in. And I'm going to pick a stock. I'm going to pick a stock that's probably been in the news more than a lot of others. NVDA. Okay, this is NVIDIA. They've got an earnings announcement coming up, right? So what do we see going on here with NVIDIA? Well, I've drawn in a couple of things in terms of price patterns in this NVIDIA chart. I'm going to grab my magic marker once again, and I'm just going to kind of go through some of the price patterns that I see here, and then we're going to talk about how we search for this, right? Oh, really, Renee? It was raining rocks from another volcano. Cool. Okay, that's good. I got to talk to you again. Yeah, that's cool stuff. All right. Anyway, so here's what I see going on with NVIDIA. Over the course of this last 6-month time frame, look at this. We had kind of this head and shoulders pattern, kind of real lumpy head and shoulders pattern building itself up with this neckline right here. Nothing's perfect. None of these price patterns are ever going to be absolutely perfect, right? And it kind of failed that pattern, right? It failed that that pattern, and it's starting to rally up. So that was one price pattern. Yeah, I'll go ahead and share this grid with you as well. It's NVIDIA. Yeah, I like that. So the other pattern that I'm starting to see here is we had a pretty good kind of maybe inverted head and shoulders, left hand shoulder, head, right hand shoulder building itself in here. And I would argue that's probably the more realistic pattern, at least right now. Now, is that pattern going to go to completion? Probably not. I don't know. We've got an earnings announcement here that could drive that to completion. Where would that completion level be? Well, let's just take a look. Let's kind of keep going with this idea. Let me make this back to my pen tool, and let me delete this, and then I want to get into something real quick. So let me come back over here to the chart. We're going to use our lines, and I'm going to say, all right, fine. Here's my inverted head and shoulders pattern. Here's the head down here, down along that level of support. Left hand shoulder right there, right hand shoulder right there. Okay, cool. Now what I'm going to do is I'm going to draw from the neckline down to the bottom of that head of that inverted head and shoulders pattern. I'm going to duplicate that. I'm going to put that up here on top. And look at that. If I go over and go back to the left here, that gets me pretty darn close to where that previous high was, right? To where that previous high was. That's kind of cool. The fact that there's some symmetry there. So that's probably the most recent pattern that's developing itself. But wait till you notice over on the right-hand side of this inverted head and shoulders pattern. Well, that's kind of an ascending triangle, isn't it? So we've got an ascending triangle that's built itself in there. So if that's an ascending triangle, when we look at the trend strength, the trend going into that is kind of a sideways trend. So that becomes kind of a 6 to 5 and pick 'em, other than the fact that you've got support levels coming up and moving higher. So there is a presumption that we might get a breakout to the upside. And in fact, the measurement objective is going to give us exactly what we were looking at for the head and shoulders pattern anyway. So you got to kind of look beyond. You've got to make your interpretation a little more fuzzy when it comes to establishing these price patterns and looking for those patterns. All right. So now here's one of the tools that some traders ask for. Can't I just have the platform identify? Can't I just have the platform identify for me these price patterns? And many of you have wondered about this little phrase right over here that says patterns over on the top right-hand corner of the chart. So we click on patterns and we go to show patterns first. And we select show patterns. And then we come down here and we select the patterns that we want to see. Now we can kind of get to looking for and drawing those patterns on the chart. Now, here's the problem. If I were to just go this, add all the patterns on the chart and click on apply and okay, I'm like, holy cow, which one do I follow? Right? Yeah, Zinc, that's a good point, because you don't have a strong bias trend one direction or the other to that point, which leads us to this, a whole lot of confusion, right? All of these different price patterns that that the computer identifies, which one do we choose, right? Now I could hover my cursor over all of these and I could start to get these projections from how the computer identifies those price patterns and where it suggests that price might go if it moves in a particular direction. It's going to find channels, it's going to find levels of support and resistance, right? And you can search for them this way. You can build your own custom patterns. I've taught a couple of classes on using the ThinkScript language to build your own price patterns, but this becomes kind of a little bit less effective tool because it throws all of that spaghetti up on the chart. Now, I would argue and I would suppose that there are probably some insights to be gained at where you have confluences of those levels of support and resistance. And that can be an interesting characteristic here, and maybe a subject for another webcast. Maybe Cameron in his advanced charting webcast might talk about that as you start to see confluences of various price patterns. What's kind of cool about this tool, I'm going to go back to that pattern tool. I'm going to go to select patterns, and I'm going to just pick a couple of patterns here out of this tool. I'm going to pick the ascending triangle pattern. So what I'm going to do is I'm first going to remove all of those, and I'm just going to choose the ascending triangle pattern. And yeah, one of those will work for sure, Zinc. So what I'm going to do as I've chosen that ascending triangle pattern here is I'm going to come over here to the displayed patterns, and I'm going to go to that little gear icon. And I'm going to click on that gear icon. And this is the tool that gives us a little bit of flexibility when it comes to the not too particular, not too precise part of using price patterns. Because from here, what we can see is the construction of a particular type of price pattern. So we know that an ascending triangle, generally, an ascending triangle looks something like this. If it's an ascending triangle, it's got a trend coming into it. Usually it's a bullish trend coming into it, not always. But then we typically have a level of resistance that is horizontal or near to horizontal. And then we have a level of support squeezing up against that level of support or that level of resistance. So you see that squeeze, that's the ascending triangle. And the intention is that it breaks out and it moves to an equal distance to the base of that triangle. So now what we get to do is we get to choose kind of the characteristics of the triangle that we're looking for. So do I want to look for ascending triangles where the trend coming in, if we look at that little question mark here, what trend do we want to see coming out of the price pattern? So since it's an ascending triangle, my assumption is going to be bullish. So I want to see bullish trends coming out of this price pattern. I want to see when it's breaking out, not when it's failing. And then I get to ask the question, well, what trend do I want to see when it's going into, right, the preceding trend? So I want to see this as a continuation of a preceding trend. So if I've got a bullish trend coming out and I want a continuation, then my assumption is that I've got a bullish trend coming in. And then if I've got, if I'm looking for something that where I can make that if this then that statement, I don't necessarily want a trade that's already broken out, although I could, but I want something that is emerging, where it's testing or it's starting to break out. So this is how I might go about visualizing on the chart an ascending triangle that is giving me the possibility of a move to the upside with a continuation of an uptrend, and it's starting to break out, but it hasn't done it all the way yet. And then I get to choose the length of time in which, in bars or periods, in which I see this price pattern being identified. So this is, if these are days, this is 10 days to 500 days. That's a long time to build a pattern. So I'm going to bring that right side down a little bit. I'm going to say, I want to see this pattern emerge over the course of 10 days to maybe 50 days within that time frame. And now I'm going to click on apply and apply and OK. And I don't see any of those additional charts here, those additional patterns. So now what I've got to do is I've got to come back to that tool and go to select patterns and go back to that gear icon again. And now I need to adjust my sensitivity. And this is where I get the opportunity to adjust the sensitivity of this particular price pattern. And I can do it as a whole, or I can do it so I can just grab this overall signal level and I can change the whole thing. I want to see a strong price pattern or I want to see a weak price pattern. Be more fuzzy and allow more false signals, or be less fuzzy and require a tighter definition of that pattern in its components and get less signals. So you choose where you want that sensitivity to be. And then you can fine tune that, which then allows you to change each one individually. And you can build the sensitivity into your pattern. And then you can, keep that as your default. You can set this up so that that's the type of pattern that you are looking for. And then you can choose what you display. So you can choose what you want those trend lines to be. You can choose to display the target areas where price might go and the time frame based on the length of the pattern as it displays that particular pattern. So I'm going to do this as always so that I can start to see this. Okay, so I'm getting to that zinc 100%. So we're going to click on apply and OK. And if now that I've got that on the chart, now that I've got that pattern set up on the chart, if I were to change my chart to something else, if I were to look at Circle, or I were to look at IBM, or I were to look at AMD, or I were to look at Disney, or, okay, there we go. There's one on Disney There's an ascending triangle that comes close to our definition. And if I hover over that, I might have to go out a little bit time-wise to see that price pattern. In fact, what happened is it failed that particular price pattern and it did not break out. So we could keep going and we could keep looking. But that's a hard way to do that, to go through that tool, unless you're clicking through your watch list on an ongoing basis. Let me show you an easier way. Okay. Now, this is where we get into some of the differences between live trading and paper money. So I'm going to go to the scan tab and I'm going to do one simple thing. I'm going to say, look, where did we see all of that strength in the indexes? We saw the majority of the strength coming in the NASDAQ. So what I'm going to do is I'm going to scan in the NASDAQ and I'm going to come over here to my public watch lists and I'm going to say, I want to look at all of the stocks within the NASDAQ composite. And I'm going to do this. I'm going to just narrow this filter down a little bit to volume. And I'm going to bring this up and I'm going to say, I only want to see stocks that have better than maybe 500,000 shares volume so far today. But I'm going to add an additional filter here. And this is where the difference is with paper money and live trading. You may not be able to do this in paper money. But what I'm going to do is I'm going to go here where it says add filter. And you see right down there on the bottom of that list, it says add pattern. So now what I'm going to do is I'm going to choose an ascending triangle. So I'm going to just deselect everything. I'm going to choose an ascending triangle and I'm going to edit this pattern. So I'm going to go back to the same thing that we did before. I'm going to say, I want to see this pattern emerging within 10 days to 50 days. I want bullish breakout. I want that to be a continuation. And I want this to be an emerging pattern. And I want my sensitivity to be fairly weak. I don't want to fine tune it too much. I want to open the filter up a little bit. We can change that as we go along. And now I've got my ascending triangle defined. And so what I'm going to do now is I'm going to say, well, over what time frame? Because if I did this, this is going to look at just today and 15-minute bars. But you know what I want to do? Because remember, I'm looking at 30 to 50 days here, or 10 to 50 days. I want to take this back and I want to say, all right, I want to look at this over the last 3 months. And I want to use a daily period because intermediate traders likely trading on daily bar periods. And I'm going to run my scan. And once I run that scan, now I'm going to get this watch list that's going to put in a column that's going to say view found patterns on the chart. And this is the really cool part. Once we get to that level, right? Once we get to that level, I'm going to go right here to that column and I'm just going to click on that column. And if I click on that column, you know what I get to see? Just that little chart snippet that's going to show me where that price pattern was within that time frame. Now I can click on that. I can go back to the next one. I can click on the next one down here and I can see where that ascending triangle was. And I can click right here and I can see where that ascending triangle was. So the cool thing about this is that I can now save this as a dynamic watch list. And we've got some great webcasts that talk about how you build this search methodology and how you save these searches as dynamic watch lists. But the first thing I'm going to do, because I know what I want these symbols to do, is I want to come up here and I want to save this. Whoops, I want to go to this one right here. I want to save this scan query. And I want to call it 10 to 50 ascending triangle. And if I were going to build something else in there, if I were going to add other price patterns, I might call it something else. But I'm going to call this the 10 to 50 ascending triangle scan or search. And I'm going to save that. And now when I load that up and I run this every time, now I'm going to get those results and I'm going to get that on a dynamic basis. And here's the cool thing. I go back to my Market Watch tab and I look in my watch lists. Look at that. Here's the 1050 ascending triangle because I saved that scan or that search. Now, every time I come back to my personal watch lists and I click on that watch list and I load that up, that's going to be new information. That's going to be whatever currently is meeting the characteristics of that scan. So those are going to be the ones that maybe have those opportunities. So you know what? I noticed one right here. Let's take a look at Fortinet, or Form Factor, actually, in this particular case. Let's take a look at Form Factor. And what I'm going to do is I'm going to go to the chart, and there's Form Factor. And there's that ascending triangle that I saw back here. And I've also noticed that it's done it a couple more times. Now, can you build an alert based on that study? Yep, you can. And again, that's going to be a tool that you can do in the live trading account. So you can build a tool that will help you do that. But what I'm going to do real quick, I'm going to share a couple of these things with you. I'm going to share this single grid with you, including all of the studies. And I'm going to go ahead and I'm going to click on share. Remember that everything that we share is not guaranteed as to time or accuracy, but that's also going to have this label script there. And I'm going to go back to that scan tab, and I'm going to share this scan with you as well, so that you've got that scan or search. And you can use that as the basis for your own conversation, because then what you can do is you can change this and you can say, look, I want to scan in the S&P 500 and intersect with those companies that have weekly listed options. Now, anytime we share scans or searches or anything else, they are not guaranteed as to time or accuracy. But if I run this scan now I'm not just running in the S&P or in the NASDAQ, but I'm running in the S&P 500 as well. And I'm looking at those that are currently listing weekly options. And so I might look at something like, let's take something like SLB, Schlumberger, SLB, Schlumberger. And I can come over here to the right-hand side and I can see that, hey, I've got a little bit of an ascending triangle right there. We're going to go to the charts tab. We're going to type in SLB, Schlumberger. There's my ascending triangle. And you notice it's kind of a skewed ascending triangle. And I also notice this is where my understanding of price patterns comes into play. And I can say, great, thank you, Scan tab and tool, for helping me to identify that maybe there's this ascending triangle going on in SLB. And I can draw that in based on what I see happening now. And I can say, hey, if this breaks above 52, then enter the trade, else wait. Right? Else wait. So you know what I'm going to do? I'm going to put in an order here. I'm going to put in an order that says buy custom. And I'm just going to click on that. Actually, I'm going to do buy. We're just going to do a buy order, but I'm going to edit this and I'm going to make this a buy stop order. Remember, a buy stop order doesn't guarantee the price at which this is going to get filled. It just tells me, hey, where am I going to initiate this trade? And I'm going to get in at 52.18 or above. If this goes up 52.18 or above, and that's not a guarantee. That'll issue as a market order. I'm going to leave that till good till canceled. We're going to put that order on here, and I'm going to put this in my stocks group. Actually, I'm going to put this in my market drive group, and we're going to click on send and fire that order off. Speaking of market drives, by the way, speaking of market drives, we're going to be coming up this weekend in San Diego. If you're in the area, we're going to be at the Marriott Marquis at the Marina downtown, or like right on the waterfront. Marriott Marquis, San Diego Marina. This is a free event. It is at no cost to you. We're going to buy you breakfast. We're going to buy you lunch. We've got a great networking reception after the fact. And we've got a full day of macro information, trade ideas, watch list creation, discussion of option strategies. You're going to have partners like Schwab Network there. Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions. You're going to have Joe Mazzola there. You're going to have Barb Armstrong there. Kevin Horner is going to be there. So it's a great opportunity. If you're in the area, come and join us. Now, if you want to learn more about some of the things that we talked about, for instance, building scans, come over here to the Trader Talks webcast page and look at that. There's Cameron May right there. Building a custom scan with Thinkorswim Desktop Stock Hacker. Building fancy scans to search for chart signals. Searching for trade candidates. Getting started with Thinkorswim. Customizing a flag scan. combining 3 Bollinger Band studies into one trading system, lots of different ways. We won't buy you an airline ticket. Sorry, Jumping Joe. I apologize, but you know what? We're going to do just about everything else. And we'd love to have you all with us for that event. And then, by the way, we're going to be, after that market drive, we're going to be in Atlanta doing a technical analysis and option strategies workshop on the 13th or 14th. So I'd love to see you there as well. So, guys, my thanks to all of you. My thanks to Cameron May for helping out. And my thanks to our great production staff for bringing this to you. Have a great day, everybody. I'm going to be back a little bit later this afternoon teaching trading index options. So I will see you then. But have a great day. Take care. Bye-bye.